Good afternoon. This is Todd Colvin coming to you from the floor of the CME Group. We are looking at metals and gold prices hanging in the new range. Opened a little bit higher, traded lower, but never really saw an intensive, momentous move outside of the range, which currently the comfort range for gold is going to be right around 1300 to 1320. We need to see a settle above 1320 to get us back in the upward momentum, bullish momentum, or below 1300, and then I think it's look out. The floor is going to drop out very quick. And if you look at right now, gold is competing not only with the dollar, but it's also competing against higher yields in the short end of the Treasury curve with rejuvenated stocks. So there's a lot of reasons why gold isn't finding a whole lot of favor here, but it's still kind of holding steady in that new range. Call the gold range has been shifted around here several times in 2018, but right now we're in a $20 range where I think we need to see a breakout up north of 1320, below 1300, or else it's kind of going to be status quo. And if you look at what the dollar has been doing, last 4 sessions or so, the dollar has been weaker. Gold has held on, hasn't traded outside the range. It's been kind of in that comfort zone. But the dollar today, after trading lower, making a lower low for I think the 4th consecutive session in a row, rallied, and the dollar kind of caught a little bit of a bid, got back into positive territory. I think that right now the dollar is a lot of question marks whether it was this recent 2-month rally here to stay, or was it just now going to be reversed and come and leave as quickly as it came in. So right now the dollar tends to be sort of what's dictating gold prices. As I said again, the aforementioned, there are other attractive investments to gold that are right now stealing some of the thunder. And lastly, what are the specs doing? The speculators were long. They got really, really long into the middle, early parts of 2018. Since we hit those recent highs north of 1350, they've been exiting. They started jumping out with, when we got below 1330. And then once we got to the lows, we thought maybe we'd see them buy again. We haven't done that. The spec longs remain at their lowest of the year, least lowest position holdings of the year, while gold just kind of treads water here. So I think it's going to be the spec longs that are going to take us one way or the other. And right now, and we need to see us breach 1320 or break 1300. Until we do that, I think the spec longs, or the speculators, I should say, because they will become spec shorts if we get below 1300, they're going to dictate the trade. And right now, they haven't been active in this space. So right now, holding steady, gold within the comfort range. We need a big move higher, big move lower to start to see something stir the pot. The dollar's not helping, and with yields rising in the short end of the Treasury curve, it's losing some of its luster. So right now, stuck in a range, gold. This is Todd Colvin coming to you from the floor of the CME Group.